And we're glad you're here. It is time for Power Players. And with me is the man who needs no introduction, the Einstein of Wall Street, Peter Tuchman. I know you've got a lot to talk about today and about everything that happened this week. Have at it.
Hey, thanks everybody. I love the fact now I'm a power player. I love that designation. I'm an honored to be here with Topstep. I'm really excited. Guys, yes, look, I'm here on the floor of the stock exchange. You can see the floor behind me, right? This is the real deal, no copy and paste. Look, if there's ever been a week where the stock market has really been on everybody's radar and just like hyper focused, it's clearly this week. Look, we are 7 weeks into 2024. We've had one bad week and 6 really good weeks. Obviously, all the stuff about interest rates and the agenda and the Federal Reserve and cutting rates coming, whether it's going to be in Q2 or Q3, is obviously on the agenda. And it's been what is sort of, if anybody is at all fearful about the sort of markets coming in at all. I mean, we've been on a roll here. Look, we are 7 weeks into the year. We are trading at record highs across the board. Right now, the Dow is at 39,200, S&P at already 5,100. That threshold and that milestone of 5,000 on the S&P 500, which we had never hit before, we literally blew right through that. So look, over the last we've seen the CPI number and the PPI number come in. It was a little bit disappointing. We did see a couple of days where we did see a little bit of weakness in the market. The day the CPI number came out, look, all expectations were on a number below 3%, right? 8%. Everybody really needs to acknowledge what a spectacular retracement. And it's obviously, for me, I know it's a function of what the Federal Reserve has done. Some people like Jay Powell, some don't. Some people think we're all printing money. Look, it's work. Look, I'm an evidentiary kind of a person. When we have a problem and we present a solution and the solution works, then we've got to respect that. And clearly, raising interest rates as we've done have brought down inflation from 8 and change percent down to 3.1%. But all expectation, look, the markets are very wrapped up in expectations versus delivery. And obviously the expectations were that we were going to break 3% for the first time. We actually came in a little hotter than usual. So it was kind of jokingly poured cold water on the market. We came in at 3.1. Like it is a minimal difference, but it was not the 2.9 number everybody was looking at. We sold off kind of hard that day. We were down 1,000 at one point during the day. But what's important to note is we did not close on the low of the day, right? When you close on the low of the day, you very often see the market gap down the next day and you see follow through on the sell side. However, this was an exception to the rule because 5 minutes into the end of the closing day, the market turned around. We had massive short covering. We had people sort of buying the dip and we rallied 30 handles on the S&P in the last 5 minutes of trading. Since then, we've set the stage for nothing but rallying. Over the last number of days, we broke through 5,000. We're at 5,100. The Dow has actually been up 300-400 points every single day. And then what happened? NVIDIA earnings. Absolutely spectacular. Now let's note about that. NVIDIA is a stock. It's obviously the best of breed within the AI space. But think about it. February, exactly a year ago, basically to the day, this stock was trading at $108. It had come in from $300 or $400. Whatever happened during COVID, it had its good times and its bad times. The stock got decimated, probably a big part of it as a function of interest rates on the ascent. 18 months in a row of massive rises in interest rates. The whole tech sector got hit. But in February of 2023, we were trading at $108. We have seen one of the most spectacular rallies in that stock. Look, we are now trading at $750. AI is here to stay. AI is a massive big part of this rally. Obviously, we've got the Magnificent Seven. NVIDIA seems to be best of breed. What was curious was NVIDIA was trading in the mid 700s. Obviously, a bit of irrational enthusiasm. Obviously, a bit of the fact that AI is going to be the power play that takes this market higher and has been over the last bunch of months, almost a year now and change. But what was fascinating was in anticipation of the earnings, people started selling the stock pretty hard. We went from about 730 down into the mid 600s. There was a bit of a retracement of almost 100 points coming into the day of the release of the earnings. Now, look, some people felt maybe somebody had released the earnings early, whether you're to buy the rumor, sell the news story, or whatnot. Nobody really understood what that was going on. But what ended up happening was, and that's why we always look at Wall Street Global Trading Academy, we always tell people never trade in advance of earnings, especially in the market that we've seen over the last 5 years. First of all, because you can be lucky for $1 or $50. This market is
Right. Right.
very forgiving. Stocks come out with blowout earnings, great guidance, and come out and go down $50. There's no rhyme or reason to this stuff. In the old days, back in the old days in Wall Street in the 80s and 90s, you'd have an earnings report coming out. It was looking like the earnings were going to be good. Guidance was good. You could just buy the stock blindly. The earnings would come out. It would go up $5. You could make the money you want. In this market that we've seen over the last number of years, whether it's a function of a lot of the option stuff, these short-term option plays, a lot of people using hedges and whatnot, we've seen more times than not earnings be good, guidance be good, or they come out, people buy the stock into the earnings release, and they go down $50. So at Wall Street Global, we try and tell people very specifically in the advance of economic data and in advance of earnings releases to be patient. Wait for the information to come out because you don't want to get stopped out and blow. You can easily blow up a trading account by buying or shorting stocks when earnings are about to come out, because no matter, you may be right about predicting whether they're going to be good or not, but there's no way to predict how this market is going to react to them. So we always say wait, let the earnings come out, plug them into your charts, let price action and technical analysis determine your entry point on that. So what did we see? 2 days prior to NVIDIA earnings coming out, they sold the heck out of that stock. It got down to 650. It hit up against the 200 moving day average. It did hit up against support, but that wasn't even the point. The earnings came out. They blew them out of the water. The stock ran up 100 points. Obviously, some of it was some short covering because, look, this stock is from 108 to 750. You know that there are tons of people. First of all, people who bought it surely didn't hold it this long. And there was a huge tranche of people who definitely were shorting this stock from 400, 500, 600, and 700. So once those blew, and there were rumors that there was no way for them. Look, they had to hit on every piston to be able to support the way the stock was acting. And so people felt this was a short up at 500, 600, at 700. It turned out that they did come out. They blew them out of the water on earnings, on revenues, and guidance. And the stock rallied incredibly. But what's fascinating is it kind of gave a hall pass for everybody to just blindly buy not only the tech sector and Nvidia, but the market itself, right? It sort of was like, okay, guys, the recession's off the story. We're not worried about interest rates for today. We are just going to, Nvidia is the stock of the week, the flavor of the month, and we're just going to buy that, and we're going to buy the market, even at record highs. Look, as day traders, it's a very hard market to start investing in because we're trading at record highs and it feels a bit frothy. But as day traders, we come in every day fresh. We come in every day with no position, and we trade these stocks. If overextended and they hit up against resistance, we short if they're getting hit and they're oversold. We use our technicals, that's EMAs and RSIs and whatnot, to buy them when they hit support. That's what day traders do by definition, right? We try to make money on a daily basis. We are scalping, hitting singles and doubles. This market, for all of you day traders out there trading, this is a market where we hit singles and doubles. We identify and protect our downside risk by using stop orders, right? And we don't have an opinion about it, because if you have an opinion about a stock, about earnings, about revenues, about the market overall, you can really get hurt, because nobody would have predicted that we'd be where we are today on Friday. Nvidia up 100, the market up 1,000 this week, right? Even with weak economic data, CPI, PPI, we've got CPE coming out next week. With all of these headwinds economically, the market doesn't care. And I love the fact that, look, I analyze them. I'm not an advisor and I'm not an analyst. What I am is a forensic broker. I like to look and try and understand why is the market doing what it's doing. This is a big short cover. This is an irrational enthusiasm. You asked, you know what I want to go to? One of your people asked me a question last week that I didn't know the answer to. The question was, did we ever see a bullish market with interest rates as high as they are? And I sent you a text about it, and I did investigate it. And in fact, in 1998, before the crash, the bubble of 2000, the internet bubble of 2000, interest rates were in the 5% range. Okay, and we were in a full-fledged bull market. Now, that lasted for 3 or 4 years. So, yes, indeed, whoever asked the question, it has happened before. It hasn't happened since then. But in fact, it did happen. But what ended up was the whole thing blew up because the bubble burst in 2000 and the
Hmm.
market of 2 or 3 years came in.
Yeah, that was the tech bubble. I mean, the Nasdaq. All you had to do was wait for a pullback and buy, and you were going to be okay. And that tech bubble certainly did burst. But that's very interesting that that's the last time that rates were this high. Peter, I'm kind of getting a hint here of potential. When you were saying irrational exuberance at these levels in Nvidia, as an investor, it would be tough to buy it up here. Of course, do you think maybe we'll get some sort of a pullback with which to be able to maybe throw some longer term investments in Nvidia?
So, look, it's a hard question. I can only be wrong in answering that, to try and predict the stock that's run from 108 to 750 with such blowout
Right,
earnings. Will
right,
will there be a will there be a time where this thing comes in? You would think that it would. You would think that it's a bit long in the tooth. It's really come too far and too fast, and you would think the stock would pull back. But you know what? If I've learned anything from the last couple of years in this market, trying to predict that, saying to myself, the stock can't go any higher. Well, we've seen that a million times. We've seen stocks go from 2 to 483 and right back to 2 again. Right? We've seen
right,
these stocks go up 50 and 100 points a day. Historically, stocks never went up that much. It was insane. So I would be irresponsible if I were to tell anybody that they should wait around for this thing to pull back. Is it possible? Absolutely. Right now, any kind of a news related pullback doesn't seem like it's going to happen because the earnings were spectacular. The guidance was
right.
spectacular. All eyes are on NVIDIA, and the whole AI space is on. So looking for a pullback, I wish you the best. I don't see one coming yet, but look, also learning anything can happen. We could see things turn around next week's CPE number could dislocate the market. Look, we've got two global wars coming. We've got definitely clear issues on the banking industry. Obviously, real estate is stumbling around a lot. So, look, there are many moving parts here. Anything can happen. One can complete a little bit of Akeda or something can take the market up and can take the market down. So I'm not sure what to tell people, who want to invest in NVIDIA. I will say one thing that I interviewed Dan Ives, who's, in my opinion, one of the top tech analysts in the world. He's at Wedbush. We're doing a new YouTube thing called Einstein and Ives. It's going to be a fun show about food, finance, and fun. And I asked him about the AI thing, about whether we should be concerned about it and what does the future look like. And he told me he went to the CES show, the Consumer Electronics Show in Vegas, and he said the amount
Hmm.
of money is in the trillions that's being thrown into AI. And he said that they are fast tracking so much of this stuff. He said we're not looking at 2030 and 2050 for these incredible breakthroughs. By 2025, we're going to be in flying cars. There are going to be robots going around your house cooking your breakfast. It's going to be like the Jetsons. So I don't know what to say. There are some tertiary stocks, small cap, mid cap, in the Russell that are in the AI space that are way more affordable, okay, that people should homework and look into because it is really difficult to pay 750 for Nvidia right now. Look, it may prove me wrong that it's trading at 1,000 and 750 would have been a great purchase.
Right.
I don't
Any of those
know what it's
any of
going to
those
look like.
small any of those smaller stocks that you can mention right now?
Well, you know what? I did notice that NVIDIA invested in a company. It was a company. I don't remember the name. If you look on the internet, the story came out about Wednesday, around
Okay.
Wednesday. The other account called Sound Mound. It was something that Nvidia put some invested in. The stock is like a $7 name. I have not done my research on it, so I'm not recommending it. But I just did notice. We also saw Nvidia put money behind ARM. Right, ARM is another stock. It went public in September at $50. It was the dog of the fall. It went down to 35, and over the last 2 weeks, it's rallied up to $150. And it turns out that news came out that Nvidia had put a lot of money behind ARM. So look, these are names people need to sort of do their homework, look into,
Of
because
course.
it's very hard. It's very hard to buy some of these flyers at this high level right now. If people want to invest in the AI space, there are surely names that are more affordable that they should do, because from what understanding, the AI story has got legs to it. It is going to be fast tracked, and there are trillions of dollars being put into it. So it's something that people should pay attention to.
100%. Well, Peter, I know we've used up a little bit more of your time than we were expecting to. We really appreciate it. Thank you so much for joining us today. And I'm sure you're getting ready for to enjoy your weekend. Any last words you want to talk about?
You know what? Look, the last thing I will say is you guys know I have an academy with David Green, my partner. It's called Wall Street Global Trading Academy. We teach technical analysis and risk management. In a market like this, which is very hard to invest in, trading at these record highs, the day trading game is something that everybody should be focused on. Our goal is for everybody to open up an account at Topstep and then come join us at Wall Street Global. You open up the account with them, we'll teach them how to trade, and then we're going to have a new generation of really savvy, well-educated day traders who are trading futures, having entered the market through Topstep and having been taught the market from WSGTA.com. Together, you guys, we're going to do some great stuff.
Awesome. We've got the link in our chat here, Peter. Thank you very, very much. We'll look forward to seeing you again next week.